What up? What up? Whoa. What's up, Brandy? Do I trade Top Step? It's actually right in front of you on the screen. Top Step. Top Step X. I took a payout from this account. I literally just got paid yesterday. And yeah. Yo, what up, Racer? I trade Top Step X, Apex, My Funded Futures, Take Profit Trader. Yo, what up, Bull Breakers? Ah, dude. It's all good. Happens all the time. Having a juice. I passed one today. I made $2,000 yesterday, and yes, you broke the consistency rule. If you made 2,000 yesterday, you're gonna have to go over $4,000 total on the account. Yep. I'm just gonna wait because I'm gonna get into. A lot of guys wanted to learn about options. Also, you can ask prop firm questions. You can ask whatever you want. Yeah, just on the combine. Yep. Once you pass the combine, there's no more. Once you pass the combine, you do not have a consistency rule to get paid. Yo, you want to see fart coin trading? Oh man. Once you pass the combine, there's no consistency rule on the other stuff, on funded. I'm just giving a couple people some time to head on because I have a feeling there's gonna be a lot of questions. Boom, 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 boom. I got my stuff up. Actually, I'm gonna take off Ninja Trader. Somebody did ask me a Ninja Trader question. I'm taking my amp off, my quant tower off. Yeah, and we'll go through a bunch of stuff. Boom, 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 boom. Oh, that's what I needed to do. I need to open the stream. Need to open the stream so I have access to the stream. I can make polls and stuff. Dude, it's so weird on a Thursday not trading or anything. Kind of weird. Now, I'm just curious. I guess people in here I should ask. Well, I see 9 people. I'll give it like 5 more minutes and then I'll start getting into. And if you have questions, throw it in the chat. I'm going to go start from the simplest of simple and what everything means. And I guess then from there we can go on to other things. Anybody trade today or last night? I traded. I made $91, and that was it. And that was it. It was all she wrote. What is all this on Top Step, actually? Why does that keep going? Oh, all the news. Oh, that's all the news. Yeah. Boom, 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 boom. Dude, I'm gonna have the new intro. Let's see if I can find it. This is gonna be the new intro to the stream.
We're gonna win so much, you may even get tired of winning, and you'll say, please, please, it's too much winning. We can't take it anymore.
Please, please, we can't take it anymore. Oh, man. All right, we got 2 more minutes, and I'm lighting this thing up, and whoever comes on can ask questions and whatnot about options. I know there's a bunch of people that I should post this in the Discord probably for people that want to watch it. Let's see. Let me just see who's on here. If you're on and you have questions, throw it out because I'm about to light it up. I'm on. All right. So I see there's 12 people on. I'm guessing, I'm hoping it's some of the people that are on the normal stream that have the questions. Ah, Josh. I'm going to start with the simplest and what everything means. Some people don't even know what it means. So if you're just looking, I brought up Tesla. Let me bring up next week's. You want to see some DEX screen trading? What up, HoloPoint? Yeah. I'm going to do some DEX screen later on probably when I'm bored. Once Jay wakes up, me and him will get on the phone and probably do some stupid stuff. What up, John? So basically, this is an options chain. The date is the date it expires. It tells you how many days to expiration. This is premium that you pay. Each contract is worth 100 shares. That's the best way to put it. It's 100 shares. I'm actually going to bring up one of my accounts. So I have 4 accounts, as you see. I'm going to bring up one of my accounts. Each account actually represents something different. So I brought up this account. I like to separate my accounts actually by longer term plays, put writing, stocks, and then short term stuff. So if I'm going to play short term stuff, I play with smaller amount of money because obviously you can make a lot, but you can obviously lose a lot. I recommend not doing any short term premium buying because you are paying a lot in premium. I prefer selling short-term premium. So I'm going to run over a couple things. So this is actually my short-term account. So it says $14. Obviously, it's not $14. So just say you wanted to buy this. This represents 100 shares. So basically, you're saying, just to keep numbers actually even, I'm on Tesla. you're buying a 400 strike. You are basically saying that Tesla is going to be over $412 by close of Friday. You do not have to hold this to close of Friday. This will move up and down every second of the day. It only trades 9:30 to 4 p.m. So being that you're buying this, you're saying that Tesla's going to go to 412. Anything over 412, you're in the profit. But if we open up, say you already bought this, you paid $12. If Tesla opens up on Monday and it's up $3 or $4 right at open, this is going to be significantly up. You might be up 30% already. But at the same time, if it opens up $3 or $4 down, you're probably going to be down 30%. So that's why I do not buy premium. What I like doing is selling premium. So it's on the other end. I would sell, and this is what I like doing. Good morning, Marie. This is what I like doing more than anything. Because say I like Tesla and I want to own Tesla stock, and I'm okay owning Tesla stock. You know, that's one of my things that I want to own. And argument's sake, we're at a good point in the chart. I'm going to get to that later on, but let's just say we're at a great point in the chart and you want to own Tesla. Well, instead of buying premium, I'm going to collect premium. So I'm going to actually sell 380s. So if Tesla currently right now that trades at 395, say Tesla does nothing all week, trades a little lower, trades a little higher, and we close the week even, dead even. So we trade and we close at 394, and you sold one contract which represents 100 shares. You would have collected $730 of profit of premium. And as long as Tesla stays over 380 next week, you make $730. Stock didn't go anywhere. Actually, the stock could have traded from 395 down to 385. Everybody holding Tesla stock could have lost money. But here you are, you actually made money. You collected premium because you sold a put. But you had to be okay owning the shares. Your break even is 380 plus, or I should say minus $7.30. So your break even is actually 372.70. So Tesla stock can trade as low as that, and you are still break even. Which is so if you think about, if you're just doing the numbers, Tesla stock could be down, I don't know, what is that, like 3-4% next week, and you still break even. If it does go below that, you have actually a couple options as it's going lower. You could buy this position back, whatever it's trading at, which it would be a loss. Or you could say, hey, listen, I wanted to own Tesla stock no matter what. So if Tesla drops to 370, I'm okay saying, hey, I own Tesla stock now. You'd obviously buy it at 380 minus the premium. So if Tesla's at 370, you're going to actually own it at 372.70. So you are going to be down in the position. And say Friday closes, you're down in the position $2.70 or whatever it is, right? Because we closed at 370, you collected the premium, and Tesla stock has dropped. So now you're down 270 and you own Tesla stock. On Monday at open, you could turn around and sell a call. So you could turn around and sell a call. Say you were down $2.70 because you did this week that just happened. And this is where the premiums are at currently. We open 394, 395, whatever, that's where we're at. You could turn around and sell a call for $11.90. So now you're going to collect $1,200. So you were just down $2.70. Now you've collected $12. So now you have $12 minus the 270 that you're down. So what is that? Now you're up $9.30. So now you've reduced your Tesla exposure or cost. Your average cost is now down another $9.70. So now Tesla can trade, and if it stays right where it is for the week, now you're up again. Now you're up $1,200 minus the $230. So now you're up $900. And you can keep doing this over and over and over again. Also, if Tesla opens at 395 and you sold these and Tesla closed at 399, you would have, or say it closed at 400, you would have collected this whole premium. If it goes over 400, you have a max gain, and that's it. You know, you would have collected the money from 395 to 400. You would have collected the premium, but if Tesla goes to 500, your gains are capped. That's the problem, not the problem, but you are limiting your upside, but your goal here is just to keep selling premium. It's actually called the wheel strategy. It's not something that I just made up. It's something that's been around. And the goal is you sell puts on companies that you want to own the stock of. And if you get put the stock, you turn around and sell calls slightly out of the money to collect premium on the other side of the trade. Following questions. Now's the time for me to stop and ask questions because I know there's questions. There's got to be questions. What up, Fred? Anybody lost? Questions? You guys breathing? I'm just using Tesla as, there's got to be a quicker way to get rich quick. I mean, so if you think about it, you're getting, you know, 100 shares. You do not. You just have to have the cash in your account. So let's do an example. Tesla stock to buy 100 shares is $39,000, right? Right? $39,000 to buy Tesla stock, right? If you sell this out of the money, you're essentially collecting, $1,000, which is a little, it's what is it, like 2.2% on your money in a week. Where are you going to get 2.2% on your money in a week? You're probably not. You're probably not. But you got to have the $39,000 to buy this stock in your account, or at least the buying power. There's cheaper examples. So I like HIMS. I've loved the company. So here's a cheaper example. To buy 100 shares of HIMS, you only need $2,500 in your account, right? It's all you need is $2,500. You could turn around and sell here 85 cents. So what's $85? I'm going to do the, yes, that's why they're covered, because you're using the cash as collateral. I like you've done some research there, Marie. So I'm going to bring up a calculator. Oh, man. What is it? $85 divided by just 2,500. So actually, if you sold these puts at 85 cents and collected, you're making 3.4% on your money in a week. They expire next week. If HIMS trades at right where it is, you make money. If HIMS goes to $24, you still make money. If HIMS turns around and goes up to $40 next week, you're obviously not going to make the money that goes up, but you're still going to collect your 3.5% on your money. You know, this is a base hit after base hit strategy. This isn't get rich quick. Also, John, I do buy leap calls. I will get into leap calls in a couple of minutes. I finance the leap calls. How's that sound? So I don't actually get charged. And I'm going to show you how I do that. So like HIMS would have to drop $1.73, which is approximately 7%. So it just dropped 7, and it would have to drop another 7% for me to just still be profitable. And then if we trade under $24, I start losing money. My break even is $23.15, which is about 10% down from where this is. So if HIMS does not drop by 10% by next Friday, you're basically going to make money here. That's why I like this. You don't have to be right in the right direction. You know, it can lose money. Like HIMS can be down next week and I could still fully make all my money. You know, but obviously if HIMS has bad news and goes down to $21, I'm buying HIMS at $23.15 because that's 24 minus my premium, and I'm buying it at $23.15. You know, but I have to be okay with that. And I'm perfectly okay with that. That's why you have to do this with stocks that you're okay owning. You can't just do this because the premium is high and you think you're going to make a lot of money every week. You know, I've been put HIMS stock. I'm going to show you. Just so my personal freaking information doesn't roll up here. So I've been put HIMS stock, and then I turned around and sold these calls last week. Obviously the numbers are messed up because this is the weekend, and disregard these numbers, but this expired worthless. So I know it says minus 70. I collected that $70. So I made, well, this is 258 minus plus 70. So I made $330 by selling HIMS calls. I'm only down on my HIMS position $135. So now I've reduced my HIMS cost of ownership. And now Monday when we open up, I'm just going to turn around and sell calls again. And so HIMS, I'm up $1,000 on HIMS. And all I've been doing is the same thing over and over with HIMS. When HIMS dips, I sell puts. I keep selling puts through the week as it dips. Comes back up. On the bounce back, I make the money on the puts. And if I get put the shares at some point, I then sell the calls, and I just keep working the position over and over again. I'll show you how I did it. So right here, HIMS had, well, no, that's freaking, right here, it had the Amazon. Was this the Amazon news? No, this was the Amazon news. It came out, Amazon was competing with HIMS. We dropped. On this big drop day, I sold 26 puts. Then we dropped more. I think I sold 25 puts. Then we dropped more. I sold 24 puts. And I'm just building a position in HIMS that I want to own on the way down. HIMS starts to come back up. Actually, this was Friday. This is a great example. This was Friday. So HIMS starts to come back up. The 24 puts and the 26 puts expire worthless. I no longer, I receive all my premium. The puts I sold on this day, I get put those 500 shares that I currently own. Then I turn around on this day, because this is Monday, right? That was Monday. Yes, Monday. I turn around and sell those calls. I sold 27 and a half calls. Now I've collected premium. We've dropped, the stock drop. Actually, it's funny. I thought today was a weekend. Today's not a weekend. Today's Thursday. My brain's messed up. So I turn around and sell those calls. Now, obviously, my stock position is coming down, but I'm collecting the premium. The premium's probably going to expire worthless because they're 27 and a half calls. And then I'm just going to rotate and just keep selling premium out of the money. And I'll just keep collecting. And I'll just keep working this position. So HIMS can bounce tomorrow. If it bounces $1.70, this will still be worthless. I'll still collect $70 premium. And I'll make $500. I'll make $800 on my shares. So it's a win-win if HIMS bounces. And if HIMS bounces up there, what's good is it'll close Friday high, Monday reopens, and I'll turn around and sell probably $29 covered calls. And I just keep rotating this process over and over again. What up, Flip? And HIMS is a good one to work with because it's only $2,500 to sell 100 shares. Now you could get put the shares, like I said, and you know what? Amazon, who's going after HIMS, could crush them, and I could be down in the position, you know, and then you basically take, you know, you take an L. Like I am stuck in ASPN. This is a good example. How big does your port have to do this? I think you just have to have enough cash to cover the cost of the contract. Each contract's worth 100 shares. So if you sell 100 shares of HIMS on the puts, you need $2,500 to do it. Weeklies. I sell premium weeklies because theta is the highest. I'll sometimes go as far out as a month, maybe. And now, you know, but I like weeklies because I just take the premium over and over and over again. Some people, like on HIMS where the premium's high, they'll turn around and sell like a couple weeks out and go like, you know, maybe like 22 and a halves. You know, so you can get, what is that? That's like almost 4% on your money. You'd get 4% on your money by January 31st, as long as HIMS stays above 22 and a half. And if you end up getting this stock, you're going to own HIMS at 21 and a half, which is pretty decent. So that's what I would do. Questions? Questions? Anybody? Okay, so you kind of get the basics. Obviously, the higher premium is going to be when stocks fluctuate. It's called volatility. Higher volatility, the higher options premium is. You really want to be selling premium. So when the market is dipping massively, say the market takes a big dip. You guys heard of the VIX, right? When the VIX is up, options premiums are up. And that's the time, the best time to buy long term. So John asked about leaps. So you want to sell leaps. The best is obviously when the market takes a crap, volatility is up. You could do something like this. And I have this with Celsius is a great example of this. So say I like Celsius. Celsius chart, it's gotten the shit kicked out of it. It's kind of forming a rounded bottom, right? It's got to get over this moving average. But this is where we're at, right? Say I like Celsius. And I'm like, man, I'm going to buy July's because I think July, or even say I go January's, right? January 26th. So that's a year from now. And I'm like, man, I think we're going to rip. You could sell these, right? And then I could turn around. I could buy premium. Now I'm buying premium. So this was $7.90, right? So basically, I'm financing. No, Sean, no, I'm not. When I look for stocks that I like, I'm looking for companies that are having revenue growth quarter after quarter, year after year. I'm looking for growing companies. I'm looking for companies that are doing things. I'm looking more than just the chart. More than just the chart. I use TrendSpider and I use Market Surge, and I can go over those also. So just to use this one as an example, I would have sold $30 calls for leaps. I would have bought $30 now I'm buying calls. So this is a vertical spread. This means I'm buying a call and selling a call. Yo, what's up, Victor? How much would that cost to take that trade? This trade that's on the screen, it says $315. Actually, I'm going to collect $315. I will look at it, Victor. I'll do it. I'll look at it. So basically, I'm selling this put. If Celsius by next year stays at $30, I would have collected $300. Now, if Celsius goes over 30, say it closes at 40 by next January, right? This part of the trade that has costed you $9 minus 360, what is that? $5.60, just say $5.50, would be up almost a double. This part of the trade would be up a double because it would be worth $10. On top of that, you also collected, $8 on this. So it'd be 10 plus 8, you'd be up $1,800. Most times you sell out at or so for something that's longer term that I'm bullish on, I will sell slightly in the money to collect a little bit more premium. Because I feel like we're going to go up here. I would say, hey, I'm going to sell $30, even though we're at 29. I think in a year we're going to be over 30, so I have no problem doing this. Now the drawbacks. If Celsius does go past 50, your gains are capped at $20 here, plus the premium you collect here, which is $8. So you're capped at $58. In the money has less premium. Yes, you are correct. It does have less premium. If you're buying calls at in the money, there's less premium. If I'm selling puts, it's more expensive in the money, obviously, because you're already in the money. So this trade, you'll earn $3.15. So if Celsius does not go and trades lower, you will have to buy Celsius at approximately $27. So anything below $27, you lose money. And this is why it's kind of better than buying the stock. The stock's at $29. If you buy the stock right now and it goes to $27 in a year, you're going to be down 7% on your money. In this scenario, you would be break even at actually $3 minus 29. Your break even is $26. No, sorry, 30 minus 3. I'm getting confused here. Your break even is $27. Anything below $27, you start losing money, which is good though. That means Celsius can trade 7% lower over the next part of the year and you're still up. Celsius trades up. If it closes at $30, you would make $300. If Celsius starts going higher than $30, this part of the trade will start making you money and you will collect all of this premium as well. And this is what I mean by financing. You're financing along by selling a put and you're using the money and you're collecting a little bit of money. And this is how I like to get into some positions longer term. I finance it using a put, buy a call spread, and that's where I'm at. I actually did this with AMD the other day. I like AMD. I did this with June. We were trading around 120, which is right where we are now. I think I sold 120s and I bought 130s and I sold 175s. So this is what I did, right? I did it all. Did I do? So what I did on this was I sold the 120s and I did this is what I did. So I got a little bit more exposure on the longer side. I collected this and AMD traded as high as 130, which means this went lower. This part of the spread made me money and I sold out in 3 days. You don't have to hold this the whole way. I'll show you the AMD chart. I literally bought this on the 2nd, which was this day. AMD went up. We went up again. And then when we opened after the NVIDIA thing at the morning, I sold right up here. And just this little movement, I think I made like $1,100 on it. So it was like 3 days, $1,100. But I had time. I bought time, and I financed the long by selling a put. Yes. Questions? Questions. If you wanted to, and you don't want to be selling puts just gets you into the stock at a discounted rate. Say I like AMD and I was going to buy AMD stock right now. I can say, hey, you know what? I'm just going to sell this put. And if AMD goes under $21, I'm going to grab the stock. I'm going to grab it at, my average would be, 118.5. All you're doing is getting a position at a lower rate. Also, you could go in the money. Say you're like, hey, I like AMD and I think it's gonna go crazy this week, right? you could just sell like a 125 and collect 480, which means your price is 120 and 20 cents. So you're collecting about $1.60 a premium. And if AMD runs $5 up, this will become worthless, and you would have collected $480 worth of gains. Walter, just post your question in here, because somebody else probably has the same question. Just post it and I'll get to it. That's what this is about. I'll answer all questions. I'll answer all questions. But sometimes I'll do that. I'm like, man, I like the stock. I think it's going to pop, and I don't want to just collect a little bit of premium. I'll sell one of these right in the money, and I'll just be like, whatever, I'm going to collect a little premium. But if the stock moves up, I want to collect some of those gains as it moves up. So I'll sell in the money puts. So that's kind of where, it's super simple. I do other things as well, like argument's sake. Say I think by March, AMD is going to go up a little bit, right? You can buy 130s, sell 145s, buy 160s, right? But you sell two. This is called the butterfly, right? So you're spending $2. If AMD closes at 145, this $2 will be worth $15. And you would have made over 7 times your money. If AMD closes at 135, you would have made 150% of your money. If AMD closes at 150, it's where it's $10. You'd be up 5x. This is more advanced options, but you're basically picking an area that you think AMD will be at by March. But you don't have to wait until March. AMD starts trading up and you're in the profit. You can turn around and sell it. You don't have to hold till the end. This is just another thing you could do that is interesting. And you can go wider, but they just have to have equal legs. Now the problem is if AMD trades above 160, this is worthless. If AMD closes below 130, this is worthless, and you would have lost all the money. So this is what I'm saying. In this example, you could lose everything you put out there. So if you put $200, you can lose $200. When you start selling puts, all you're doing is collecting the money. So you're constantly collecting premium. You're not really losing. You're just collecting money over every week. You're collecting and collecting and collecting. And if you do get put to stock, you start collecting on the other side, where you start selling calls. That's why I like doing that. It's just a constant cash flow of collecting premium versus, trying to hit a home run. Now, what you see on Twitter is all these guys that are buying weeklies that expire, and they're buying this. So they're constantly putting money out, hoping that AMD goes up $10 and they make 3x on their money. I'm not trying to make 3x on my money. I'm just trying to collect base hit after base hit after base hit, where that's all I care about. John, what do you like? Financing the leaps? Financing leap positions, I'm guessing. I meant to take a chunk of money and do a bunch of leaps this year, but the market was so high that I didn't want to do it. You know, if we dip over the next couple months, I will do a bunch of leaps. I'm just not into doing leaps where the market is so high. I actually sold a lot of my positions 2 days ago, only because where the market's at. Questions. Walter, throw some questions in here. Questions. Just this is the time to ask. Time to ask, time to ask. Yo, what up, Andy? I took a 30K Roth IRA to 270K in less than a year selling cash covered puts. Yeah. Yeah. I mean, you could definitely get real interesting selling them in the money, collecting a lot of cash. I think everyone thinks, you know, it's a big compounding game also. Like say, you know, it's compounding over time is the best way that I put it. It's earning dividends on the stock without them giving you dividends. You know, it's just a constant flow of cash is what I look at it as on stocks that I don't mind owning. So, you know, this is what I've done this year. Actually, the last 2 trading days I've been red. Last 2 trading days I lost $400 and I think $600. I use this formula for cash covered puts. Total risk divided by profit equals double time. But these are all stocks that I played. I didn't mind owning. Like, I don't mind owning NU at all. NU, Celsius, HIMS, NVIDIA, TSM. You know, some of these positions weren't just cash covered puts. Some of them I did buy options, and I can get into why I buy just options sometimes because I follow big cash buyers into these. So things I look for on companies that I like, I have a double times as low as 6 weeks on stocks. Like, yeah, so when the volatility is super up, let's see what some of them are at. I mean, if you think about it, if you sold a put right here, you're collecting almost, what is that, 8% on your money in a week, Andy? If you don't mind owning GameStop. You know, here's another one. This is like 6% on your money in a week. If you sell this put and the stock stays above 1050, you've collected 6% on your money in a week. Yeah. You know, like I said, the worst case scenario is you own the stock at the end of the day. You know, you just own it, and I'm okay owning the stock. Questions? Are you stocks under $5? Yeah. Where's plug out anyways? Let's see. I have some on my watch list. I haven't updated this watch list in a while. By the way, guys, I back tested something that is no other than fucking crazy. I back tested today. I'm going to back test for the whole month, like for the last 30 days. And I'm going to put it out in a video today. It's absolutely, it's insane. LC might be one. Let's see what LC's at. Nah, LC's not a big enough. Well, that's what I'm saying, Andy. People don't like, you don't need a lot of money. Like, obviously, I'm doing this with a lot of money. Between this account and my Robinhood account, you know, I'm getting close to like 200K. I've taken money out. I trade with about 200,000 now, but you don't need $200,000 to do this. You can do this with $10,000. You can do this with $5,000. You know, the percentages stay the same. The percentages aren't going up or down. Yeah. I want to get my kids involved. They're just too young. I need them to be like 12. My kids are like 8. My oldest is 8. I manage their portfolio. I'm just looking at some that I think would be a high volatility. Dude, HIMS is like the number one that it's got such high volatility right now. Like, in a week, you can collect like 5%. Like, that's crazy. Oh, you know what I've been doing? This one's been wild. So this is MS MicroStrategies. So right here, you can collect 1% on your money in one trading day. As long as MSTR stays above 317, you would collect 1% on your money in one trading day. MSTR might drop, but it would have to drop 5%. It just dropped 10%. It just dropped 2%. It'd have to drop about 5% for me. But it's a bet, Cove. It's all a bet. It's all a bet. Oh, well, this way, I don't know how far. This way, the worst case scenario is you own the stock. So this is for people that don't mind owning the stock. The worst case scenario is you own the stock at the end of the day. This isn't buying premium. This is selling premium. The buying premium, yes, it's called, I said that earlier, Andy, it's called the wheel strategy. Yep, that's all it is. You basically, you sell premium. Worst case scenario, you own the stock at a discount. And then you turn around and sell calls and just keep collecting premium on that. And you just do it over and over again. Well, that's what this is, Ace. It is a long-term. So give me, Ace, give me a stock that you like owning. Give me a stock that you're like, man, I want to own that. Is that Google? Is it Amazon? What stock are you? Give me a stock that you like, that you're like, that's my number one stock I want to own. And I'm going to give you an example with a stock that you want to own, so you feel like safe doing it. Apple, okay. dude, you fucking confused me. I thought it was AAPL. All right. So Apple's trading at 242. Now, I'm not even going to dive into the chart because I'm not even going to get into technical analysis. Let's just say Apple is at a spot in the chart where you don't mind owning it. You're like, hey, I think Apple is undervalued here and I want to own Apple, right? Cool. Apple's trading at $242.70, right? This is where it closed at. I'm like, you know what? I'm going to sell $242.50s. So it's basically right at the money, right? I'm going to collect $283. If Apple closes next week at $243, you would have collected $283 and everything's done. Worst case scenario, Apple dips. Apple dips to 240. You're going to have to buy this stock, but you sold 242.50s. You collected $283. Your break even is actually at like $239.90 or 80 cents. Am I doing the math right? No. It's basically $3 under. Your break even is $239.60. So as long as Apple stays above $239.50, you make money on this trade. If it trades below that, you can own Apple, or you can just buy this back at a loss. But most time you just say, hey, listen, I was willing to own Apple. What's up, Kid Poker? And that's it. You own Apple then at a discount. That's all you did was now you own Apple stock. And then what happens is next week, when you're given the stock, you turn around and you sell a call against it and you collect even more premium. And you just keep collecting premium over and over and over again. Would I buy Apple right here today? Probably not. Probably not. You know, am I going to, where do I think it's undervalued at? Apple's rough, man. Like, Apple's one of those that I don't trade because you don't get a lot of premium from it. The reason you don't get a lot of premium from it is obviously because it's Apple. But I would want to see a real dip in the market to buy Apple. Like, I would want to see Apple come down and touch the 200. And I would say if it comes down and touches the 200, I would probably buy Apple. Serve has options. They're probably super. So here's a good example. Yes, more premium, more IV, more risk. 1000% Ace. Yeah, so if you're risk adverse, Apple's great, man. Apple's great. You could probably just collect premium on Apple week after week. And the worst case scenario, like I said, is Apple dips. You're buying Apple at a discount from where it was at when you put the trade on. And that's it. And then when you're given the stock, you're going to sell calls to collect premium over and over again until the stock trades above the calls. Like Serve, you can collect almost 10% on your money in a week if Serve stays above, but Serve can obviously just dump. Serve was just at $24 and now we're at $16. So, that's a crapshoot. unless you really want to own serve. If you're like, hey man, I want to own serve, and I think, you know, 16.50 minus $1.50, my break even is $15. Hey, I'm fine with that. Then you do this. But, you know, I don't do iron condors. The fanciest stuff that I do, I'll use Apple as an example for you. Like say I like Apple and I think Apple's going to trend to like 250. I might do like, you know, something like that. I like to be wider though. Like honestly, I like to be wider. So like maybe I would do, you know, something like that. I like a butterfly. So this is a butterfly where basically, you know, I'm paying $250. But on the flip side, if I like Apple, I can also sell a put at $230. And now this trade's only costing me $135. E-Trade's dashboard is the very best for options. So I'll do something like this where, like, worst case scenario, I'm going to own Apple. If we trade under 230, I'm going to have to buy Apple. Worst case scenario, I lose $130. Right? If this trades and closes at 255, this part of the trade is going to be worth $15. And I would have collected $315 here. So net, what is it, like $1,800 you can make off this? You could turn 135 into 1,800. Obviously, if Apple dips down to 220, you know, you're going to pay the $10 here plus this. You're going to be, you know, $1,100 loss if it goes down to 220. But if it trades and closes at 255, you can make 1,800. If Apple trades over 270 by February, you would have lost. It has to trade between 240 and 270 by close of in 44 days. I like the butterflies with selling a put also because it basically finances the position. Your break even is 240 plus $1.35, so it's 241.35, and your break even up here, you don't want to go above 268.70. Anything in between that, you're profitable here, and obviously you're profitable here. Questions? Butterflies are definitely good for small accounts, especially if you can go wide with time. I know I'm spitting out a lot of information, but honestly, at the core, all you're looking to do is sell puts of stocks that you like and collect weekly premium. And if it trades lower and you get put the stock, you turn around and sell calls. That's how simple it is. And if there's bad news or something that causes it to drop and you want to get out, you can always buy this back. You don't have to hold this till the end. You can always buy it back. It's just, you know, that's all. So you can manage the position. You know, I bought some of them back. But I like working with stocks that I like, that have, like, my stocks that I like are ones that I like the company, but also have some type of volatility in them. Do you have an estimate of what your profit? Well, right now, so I lost money the last 2 trading days. I lost 400 and like 700. I would say that, see, the thing is, I'm also buying calls. So if I took away all my buying of the calls, I would probably be shooting between, probably, like, realistically, 3 to 5% a month. You know, this isn't a get rich type thing. I also take risks on buying options with, you know, buying verticals or financing a put, financing a call by selling a put. So I'll do more, not super risky, but I'm always financing my calls by selling a put. And, you know, like I said, I didn't make any money the last 2 trading days, and we're already, you know, year to date, we're up 8,300. My bread and butter is selling puts, and I leg into selling puts if I think we're going to go down further. And then when I get assigned, I write calls. That's how I made all my money with HIMS. All my Celsius money, I've sold puts, but I've also did a vertical spread with that. Hood has been all selling puts. I'm just looking at ones that I only sold puts. That was Riot was selling puts. TDW was selling puts. CCJ was selling puts. Some of this other stuff was like Celsius, I sold puts, but I bought options as well. IREN, I sold puts only, I think. The only reason I'm down here on MSTR, I use that to hedge my whole account. And I got hit with it. I got hit, but I used it as a hedge. SoFi is the only stock that I'm down on that I've sold puts on and I'm holding. And as you see, I'm down on it. I've since sold calls against my position, where as of close tomorrow, I would have collected $145, and I'm just going to repeat the process over and over again. SoFi does not give you great premium. Well, actually, it's not terrible. I'll probably end up selling these, which will create $120. And if we do trade back up to 1550, I would make $600, and I would have collected another 120, which would make me positive. Yeah, yeah, Andy, like, you got to know when to hedge your accounts, and things like that. You know, if you, so I'll just bring up the NQ. I don't even know where we at on the NQ anyways, down here. So after we bounce and you have 2 big ass days, I'm not looking to sell puts when we're up here anymore. Like, that's crazy. You know, I'm looking to take profits off or let the shit expire worthless and collect all the premium. You know, I'm looking to sell puts after we drop in this range. Now I'm like, you know what? The Qs have pulled back. Then I pull up the stock and say, okay, where's the stock at? You know, I'm looking to sell puts on red days, never when the market's up big. What's up, Amit? Do you like more to operate options or futures? My bread and butter has been options for many, many years. So I always feel like that's my baby. I love futures because it's constantly moving. But options, I might only trade one option trade all day, you know, and just let the options deteriorate or move in my way for the day, and I don't do anything. You don't have to make a trade every day in options. That's why I like it. You know, I do look at the Q's charts on the daily, and it kind of shows me how much risk I want to take on. You know, after we make a move like this, like even up here, I'm not selling more puts. If I've sold a bunch of puts down here, I'm taking profit up here. I'm waiting to drop. Yeah, futures is good because you can leverage, you know, you're getting leverage. I trade future prop firms. I also trade my own money in futures as well. So I kind of do both. How many symbols do I trade? I'm always looking for companies that I like. You know, I use TrendSpider to find companies. I use TrendSpider. I use Market Surge. I'm looking for companies that are growing, companies that are doing things. You know, things like that is what I'm looking for. I'm not looking for companies that are just like Fiverr. Obviously, Fiverr jump, but like Fiverr's not doing anything. Like Fiverr is just Fiverr. Like, you know, I look at, you know, MGM. Like I'm not interested in the MGM. MGM's not doing shit. Like, it's just a casino. You know, I'm looking for companies that if I get put the stock, I know they're growing. I know they're doing things. I'm in on that. I use my formula in double. Hold on one second. Cove, what delta puts do you sell? So there's some guys that sell like, I don't actually really pay attention, but they sell like, I think it's like 20 or under 20 or under 30. I don't, oh, here it is. There's guys that look for like delta that, there's a guy I know, he goes like a month out and he's looking for like, I think he said like 30. I don't even pay attention to it, to be honest with you, because I don't care that much. I care more about the company and what the company is doing, and if I want to own the stock, than what the delta is. Like, I don't give a shit if the delta is high or low. If I don't mind owning the stock. The traveling trader is probably one of the best. Yeah, I don't know who that is, but I'll take a peek. The thing, I believe that he's traveling around because it doesn't require a lot of time. I've never seen this dude in my life. What does he do? Does he buy freaking? Yeah. Josh, I pay attention to I pay attention to very few people on YouTube. I follow people on Twitter. Twitter is where I do a lot of my finding people who are interesting that put out good. Because the thing about YouTube is I got to watch the video. On Twitter, they put all the information. I can read it real quick. And, Twitter, I like Twitter for research. Obviously, I double check all my shit, but it's a good place to start. Like, I always think about Twitter like this. I have a couple different Twitter accounts. Some I don't even tweet in. I just separate people I want to follow. So, like, I only follow in one of them people that put out really good research. And I feel like it's a net, right? They put out all these symbols. I look at it, and then I bring in the symbols, and then I do my own research. And I'm like, all right, they like this for that. Do I like it for that? Do I like it where the chart is? And then I kind of think and think about it. And sometimes I'm like, I just don't agree with what they're saying, and I just skip it, or I look at it, I'm like, you know what? I like what they like, but I don't like it where the price is. Let me put an alert here, down here. And when it comes here, I'm going to get involved. That's what I use Twitter for. Yeah, I mean, the problem with futures is if you buy today, you're going to be right or wrong, right? So argument's sake, let me just do, say this is futures, right? You bought right here. You're either going to be right or wrong, right? But on options, if I buy an option that's down here, this thing can trade this whole area and I'm right. The only way I'm wrong is if it comes all the way down here. So my area of being right is much bigger on options than futures. Yeah, I mean, you could do that. I mean, Josh, I'm not even going to get into the weeds on stuff like that. Like, people on here are wondering, people, I'm trying to keep it super simple. But yes, you could definitely get into a futures position, hedge it with options, and do all types of crazy shit. Without a doubt, with a shadow of a doubt, you could do a lot of things. I'm just trying to keep it simple. But yeah, I'm trying to keep it to selling puts, collecting premium, and then if you get put to stock, you sell calls. That is the most simplest way to make money in the markets, and you're owning a stock that you want to own anyway. So if you want to buy it, say I wanted to buy DigitalOcean anyways, and I'm going to buy the stock. I mean, I can get into that also. Everything I do is cash secured. So what Josh is saying is you could sell put spreads. So let's get into that because it was brought up. I mean, you could, man, what's a good one to do it on? Let me go here. All right. So if you don't have a lot of money in your account, you can do spreads. So basically, you're selling a 185 put, buying this put. So you're basically limiting your downside. The most, I mean, you can lose 5x your position. You can lose $500 here. You know, this can go as high as $5, but after that, that's the most you can lose. This would cost you $95, and as long as Google is above 185 by January 31st, you would have collected $100. And this reduces the amount of money you need in your account. The amount of money you need in your account for this is $500. So if you had $500 in your account and you did this, you would make 20% on your money if this hits. If Google trades all the way down to 155, you're still limiting your downside. Yeah, you can buy as many contracts as you want. The big thing about this is you limit. If you would have just sold and Google has bad news and goes down to 155, you're going to incur a lot of losses. By then buying this, it cuts your loss at 180. But instead of collecting $2.30 of premium, you're collecting 95 cents of premium. So you're obviously collecting less money, but a lot less risk. That's what these guys are saying about put spreads. Bull put spreads with risk is low $50. Yeah. Yeah. I mean, you can go down to HIMS. I mean, this is going to cost you $42, and the most you can lose is $150. No, not even. The most you can lose is this would be worth $1.50. So the most you can lose is $100. Because you're collecting 42 cents, and the most this could be worth is $1.50. You know, this is actually not a bad put spread. And your account, this is like a small money account type trade. You know, because the most you can lose is $150, and you can make 42, so you can make almost 30%. You know, that is not Galen anymore. As you're playing the house. Yeah, you are. I mean, once you start selling premium, you're now the house, because the house sells premium. That's, you know, that's all they're doing is selling premium. Oh, man. Well, it's almost lunchtime. I've gone over a lot of stuff. Do people have questions? Anybody got questions? If you got questions, now's the time to ask. You can ask prop firm. Hey, what's up, Bam Mal? You can ask prop firm questions. You can ask options questions. This to me, over how many years I've been doing this, which has been a lot of years, has been the most profitable thing I've ever done. What's my goal for prop firm payouts? I don't know. 6 figures. I'm already at $2,000. I'm at $2,000, and what did we trade? Only a couple days. So we only traded 5 days. I'm at $2,000 of prop firm payouts, and I'm at $500 of real money futures. So what is that? $2,500 in futures. Oh. Marie, listen, I love talking this stuff. If you're ever interested on the stream, just ask questions or comment on this video, because other people probably have the same question, but they don't want to ask for whatever reason. Just ask. You know, this is what I use. So I know I talked about selling like weeklies. In my retirement account, I'll go like March, and I'll be like, I like hymns, what if I got hymns at $20, and I'm just trying to collect, what is this, like 7% on my money in 3 months? Like, I do trades like this in my retirement account where, hymns would have to drop 20%. If hymns drop 20% from here, I'm still going to make my 7%. I do longer term. I'll have to look. I don't know what the doubling formula is, Andy. I'll have to look. But like in my retirement, I do stuff like this where I sell longer term, and that's kind of my thing is longer term, and I let it sit. You make less premium because it's not weekly, but I'm okay buying hymns at $20 minus, $150. So my cost on this would be buying hymns at 18 and a half. I'm not in that trade. I'm just giving that as an example. You can use that with like Google, where you're like, hey, Google, I like Google. If I sold Google 170 puts, I can collect, see, it's just, Google is just rough because the premiums are so low. Like this is like 1%. This is almost 1.5%. I would look for something spicier. Me, this would probably be more my speed, where I break even on Google at 180, but I can also collect, 2.5%, 3% or something like that. Also, I wouldn't be buying Google here. Google and me is kind of up. I'd want to buy Google if it dropped to at least 185, if not 170. I want to see Google back down here. I don't see it in the Discord. Unless you put it so. I'm just looking for it. Yeah, I don't see it in there yet. No, you can, Andy. Andy, you could definitely put it in. Yo, I'm okay with you putting in anything in the Discord, man. If it's gonna help people out, I don't care if it's somebody else's YouTube channel. You know, I'm here to help people out, not say, oh, don't go look at this guy's YouTube channel because it takes away from me. Like I'm perfectly fine with you going and expanding your knowledge base to other channels, and maybe you pick something up there and you bring it back and you tell me about it and I learn and I'm like, wow, that's pretty cool. Like I want to spread the knowledge. I'm not, hey, what I'm teaching you is the only thing that you can make money with and that's it. Like that's not what this is about. Like I am perfectly fine with bringing in other channels stuff, you know, as long as it's good. So just throwing that out there, man, without a doubt. Throw it in, Andy. Andy, throw it in the chat. I don't know how to approve it. But yeah, put it in the chat. You have my approval to put whatever that is in there. I'll look for it later on. Right after lunch, I'll watch it and I'll look at it. But holy shit, it's so hot in here. It's 76 degrees. Holy. I got a space heater in my office. All right. Any other questions, guys? Any questions about prop firms, copy trading, anything? My boy. All right. Sounds good. I'm going to jump off. I'm going to close up the stream. If you have questions, just comment on the video. Yo, hold on one second. Comment on the video. And I'm back testing a strategy after lunch, and I'll put that video out tonight. Dude, it's wild how many times it hit so far. I got to make a spreadsheet though. But all right, I will see you guys on the stream tomorrow, 10:30. Peace.